Alright, we're back with another earnings video. This time we're covering Teladoc. If you missed the Google and Shopify videos, those are going to be in the top right corner. But let's talk Teladoc for those of us that are still bag holding this company. The stock is down around 14%, might be down 18% because that's how much it fluctuates after the market close. So it's down now 14% or so after hours. What exactly happened? Well, we're going to see in this video, but there is again this story of goodwill. So earnings per share, there's a huge miss on that. We're going to talk about in just a second. First of all, a couple of days ago, actually, Teladoc announced a new COO. In this case, this is Mike Waters. He will work closely with Jason, which is the CEO of Teladoc, on everything that, well, Teladoc is supposed to do. There's a bit of information about the guy. So for more than 2 decades, Mr. Waters has led strategic operations and growth initiatives for healthcare companies. So that's good, at least he knows the industry, helping to create accessible, affordable care services, as well as innovative ways to transform care experiences. Okay, there's that. It's a nice addition to the team, and probably it's good that Jason has someone that has such a great experience in that industry to maybe now a bit support the guy, because, well, Teladoc has been hit left, right, and center, not just because of the stock price that has gone down, but because that merger with Livongo has not been as smooth as they thought it would be. So to me, it's a great addition. Now, before we go look at the numbers, if you want to support this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchyinvestor and do check out all the other links down in the pinned comment. Some of it might actually save you some money. All right, so the financial highlights. Q2 revenue came in at $592.4 million. It grew 18% year over year. And well, it's towards the upper end of their own guidance. So that's okay. Now, Q2 net loss per share is $19.22, primarily driven by non-cash goodwill impairment charge of $3 billion or $18.78 per share. Now, if you take this out, they actually, well, beat on their own expectations when it comes to net loss per share. So there is a little positive, I guess. As for Q2 adjusted EBITDA, that came in at $46.7 million. That is also towards the upper end of their own guidance. And then for the full year revenue outlook, it remains unchanged, but they do expect it to come in towards the lower end, so towards the $2.4 billion, again, macroeconomic environment, etc., etc. Now, as for Q3, we're going to have a look at all of the outlooks a bit later. Now, I'll start with the first problem here, and this is something we've seen in the last quarter as well, is the adjusted EBITDA is down now year over year, 30%. Last quarter, it was also down, so that's something they need to work on. But then again, well, we know what the last 2 quarters looked like, especially also if you add that goodwill thing there, which was bound to happen, to be honest, especially if you look at how much they paid for Livongo. But there are also some positives here. So access fee revenue grew 20% year over year. Visit fee revenue grew 7%. As for the split between US revenue and international ones, so in the US it grew 18% and internationally that grew 13%. And now as for the US paid members, that came in at 56.6 million. They expected it to come in between 54 and 55. So coming in at 56.6 is a nice little beat. So we'll take that. The average US revenue per member also increased quarter over quarter, so that's nice to see. Unique chronic care members increased very nicely quarter over quarter, much more than in the past quarters, to 798,000. So great. As for the key operating metrics, so as for visits, they expected visits to grow between 20 and 26% to come between 4.4 and 4.6 million. So you can see here that it exceeded 4.6 million a little bit. So again, some positive news there. Utilization is up to 24%. Platform enabled session is now down again quarter over quarter, and year over year it's basically flat. And as for Livongo member data points, they keep increasing that. And again, that's the magic of Livongo. That's what made that company so good. Now it's just a matter of how well they can integrate it with Teladoc. And now a positive and a negative. Let's start with the negative points. So again, adjusted EBITDA and adjusted EBITDA margin been declining for the last 2 quarters, and that's bad. On the flip side, on the left, the positive one is that gross margin and adjusted gross margin have increased again. Last quarter it decreased and everybody was pissed because, well, they basically said that their margins will increase and it clearly did not. This quarter we increased again and we're even higher than before, so great, I'll give them that. And now we're nearing the end of this review. So cash equivalents stayed the same, approximately $884 million. Convertible and long-term debt on balance sheet, same thing here, 1.53 billion. But small change here from last quarter. Operating cash flow is positive again. I believe last quarter was around negative $31 million or something like that. So now we're at positive 61 million. So I'm happy to see that. And then CapEx stayed approximately the same, $76 million. So overall, the stock is down 14%, fine. I don't care what the stock does. But overall, this quarter, in my eyes, is much better than what we had last quarter. That does not mean it's great and you should be buying left, right, and center. No, it's just a nice indication that at least last quarter is in the past. And this one is a bit better. Let's see if they can build up on that. Now let's have a look at their outlook. So for Q3, they expect revenue to come at $610 million at the midpoint, representing a year-over-year change of approximately 17.5%. Again, we know what they said. Until 2025, they expect to grow around 25% or so. Well, right now, we're not close to that, especially not if they are going to, well, achieve that number that they gave us here, only at the lower end of things. But hey, that remains to be seen what happens. Now, net loss per share, again, not great, negative 85 cents to negative 60 cents. As for adjusted EBITDA, so as you can see here, year-over-year change is a complete disaster, right? Between $35 and $45 million positive. US paid member between 55.5 to 56.5. That's up 6 to 8%. And then US VFO access only grows 2% to approximately 24. And then total visits to come in at 4.9 million at the midpoint, representing a year-over-year change of around 22.5%. And again, I'll reiterate, the full year guidance does not change. They now expect results to be towards the lower end of those ranges. And so let's end this video. By the way, I rechecked how much Teladoc is down after hours. Now it's down 16%. So when I started the video, it was down 14. Now it's down 16. That's how fast things can change after hours. Now there's obviously the earnings score still coming up. I will make a pinned comment if something important was mentioned. But overall, like I said, this quarter is much better than the last one, but that does not mean that I should add to my position, because right now I do not feel comfortable adding to my position. I would like to see the next quarter and the one after that to be even better. Now, these are my thoughts. Obviously, do share your thoughts on Teladoc down in the comments below. Buy, sell, hold. Leave it all down in the comments below. And if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, especially now during the earnings season. I would really appreciate that. And I'll see you all in the next one. Bye bye.